What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and hopefully you watched yesterday's video so you know exactly where we're at in the charts and you saw how beautiful we delivered today. So here's Tuesday on dollar, and you can see, just as anticipated, we managed to run at that Monday low and trade on higher. We failed to take out these highs, that was expected, and now you can see it looks like we're going to close with quite large wicks on both the buy side and the downside. Now I am happy that we took out that low right here on the Monday. Obviously we've grabbed stops and we got a nice reaction away from that, and that means we can start thinking about potential buy side liquidity and buy side targets for the week to start trading up towards. Now tomorrow is the first day we actually have high impact news this week. It'll be 10 a.m. So 10 a.m. news, days with 10 a.m. news tend to be quite weird. I don't like them just because the consolidations can be quite heavy because they're waiting, right, to move the markets on them. So definitely be careful with that moving into the new day. Nonetheless, let's drop down to lower time frames. But first, let me just remind us, we've got this fair value gap. You can see we're volume is still respecting that 50% level absolutely gorgeously. And if you want to do some research, if you look at that 25% level, you'll see how volume also is respecting that. I do like the fact that we're closing above the fair value gap. If anything, this fair value gap should now provide support for price, and the very lowest I want to see price go is going to be the midpoint of this wick. So with that taken into account, as we drop to a lower time frame, we're going to be looking around this midpoint now to see, okay, are there any PD arrays down there in the discount that could potentially help send price higher? Because remember, we want to see an up close week, don't we? So that's how we're looking. So let me just quickly mark these out as well. This is our goals. These are like our long-term targets. But yeah, let's drop down to the 4 hour. And guys, if you haven't yet joined the mailing list, make sure to do so. The link is in the description. And here is Tuesday's trading. So we pretty much traded higher the whole day after creating the low. Wait, let me drop to the 1 hour. Yeah, the low was created on Tuesday. So let's go back to the 4 hour. Traded higher, premium into this fair value gap, traded up into a mitigation, high, low, lower high, and then price is displaced. So this is a mitigation block, and you can see we've had quite a strong reaction off of that. Now usually what I'd be looking for is a breaker at this point, meaning that I'm looking for the last up close candle before the down move to send price higher. That means I'll be looking at this candle, but the way that price is moving is so slow and sticky, I'm not really too keen on it, and I'll show you what I mean as we drop down to the 1 hour time frame. So let's drop down to that now, and I will just quickly divide, bear with me, the days up. So here you can see I have the daily dividers. Here was the low getting created at 1 a.m. and then we traded on higher, and that was swinging. Now if this was the low of the week, and I'm not saying it is and I'm not saying it isn't, but if it was the low of the week, then that means that this up close candle should be the breaker. And if it was a breaker, that means we should get a strong reaction off of it to trade to the upside. Personally, I don't like the way we've traded into this, and I wouldn't be surprised if moving into the new day, oh, you can see we just opened higher, great. But as you can see, I wouldn't be surprised if moving into the new day, we did dig quite deeper into this range. And that's purely because of this kind of displacement right here to the downside, and how high up we went before pulling back into the range. Like, this isn't ideal for me. So what do I mean by that? Let's go to the 15 minute, and you'll see we just about swept that low. Yes, we done it, and you can see our price is trading on higher, but the way it's falling back towards the quote unquote breaker is not the cleanest, and that's why I'm a little bit more cautious, and I wouldn't be surprised if we did see dollar dip quite deep into this range. Now, where into this range could it be where into this range could it be trading? Well, on the 1 hour there is a nice bullish order block right here that I like the look of. So let's get that marked out, and I'll make this blue. And I'd like to see how price treats this as we trade into it. So let's say on Tuesday, maybe London session, we trade into this. If this supports price, I'm happy to remain long, and I'd start thinking about running out that Tuesday high, and then that last week Friday high as well. However, if we start getting deeper than that, as in if this bullish order block gives way, that's when I'm looking at these relative equal lows. So this low, and this low to get ran. And I wouldn't be surprised if price did that, especially on a Wednesday before high impact news on the Thursday and Friday. So that is something to consider. Yeah, Wednesday is looking like one I'm probably going to sit out on, just because, like I said, I don't like the way it's consolidating so much and it's hanging around. We don't like to see price hanging around. We like price to trade into the PDA rate and then leave it like that. For example, look at this breaker right here. We got a low, high, low, low, last up close candle, drag that out. As soon as price trades into that, we're gone. Trades one more time, and then for the rest of the day we traded on higher. So I would expect the same reaction when we're trading into this up close candle right here, as we trade down into it, and we haven't even touched it yet from the 15-minute anyway, so that's something to note. But my point is, we're not leaving it the way I want to see price leave it. So moving into Tuesday, I wouldn't be surprised if we traded deeper, hitting that bullish order block, and then it's either going to give way and we're going to run these lows one more time, or it's going to provide support and then we can be comfortably long, expecting Tuesday and that Friday high to get taken. So that's how I'm moving into Wednesday. Very cautious, and remember, the news is at 10 a.m. So they're likely going to do a lot of consolidation and a lot of manipulation running up to there, because it's not even 8:30 that they're going to be moving, or there's going to be market sentiment. It's 10. So be very cautious, guys, around 10. And yeah, let's now head over to GBP USD. We'll start on the daily here as well. And what you'll find is that they're holding GBP in such a high and strong consolidation. It's ridiculous. So here's the fair value gap on GBP USD. You can see that we closed it in nicely with the wicks. Again, look at volume, staying below that 50% level, supportive of our bearish bias. Very highest, I'm willing to let price trade. I say willing, like the very highest I want to see price trade for me to remain bearish is going to be the midpoint of this wick. So let's get that marked out like so. If we get above this, then I need to stand back, let price do its thing, and it's likely we may want to try start trading into this this bearish order block, or maybe these rejection blocks up here. But until that, I'm happy to remain bearish so long as we respect that midpoint. Let's now go to the 4 hour we have right here, and you can see clean fill of that fair value gap, beautiful displacement to the downside, wicked back into that order block, and now you can see we're entering a bit of consolidation before potentially trading on lower. But like I said, if we're expecting dollar to potentially dig deeper into its discount, that means we need to find some kind of premium that pound may want to trade into. Now, I don't see any premium here unless it's going to run Tuesday's highs, which it could very well do. Why could it do that? Well, we do have this fair value gap, which I spoke about in yesterday's video, so I'm still going to have that marked in my charts because price may still want to wick up into there. But generally speaking, we can drop down to the 1 hour and see what else we can potentially find. So you can see what I mean by the holding in consolidation. Look at this. Do you want to be trading in those conditions? Look at that. If your answer is no, then you're good for you. If your answer is yes, then I'm going to pray for you, because this is not nice and it's very high resistance. And why is it high resistance? Because we're trading against our bias. We're moving higher, right? So we want to see high resistance moving higher, and we want to see low resistance moving lower. We haven't had significant displacement. So as far as I'm concerned, I'm still bullish for the beginning of, how I want to see the week trade. I want to see the high get created. Let me show you what I mean. So I want it to create a high and then trade lower and then close like that. We haven't had that displacement yet. So there's no reason for me to be thinking any bearishness, meaning that's why I'm happy for price to potentially reach up into that premium range. And we need to be careful of that, especially with dollar, with these beautiful relative equal lows below here. We need to be cautious of that. So yeah, very cautious moving to Wednesday. Let's drop to the 15-minute, take a quick look, and yeah, not the nicest. But again, look at these highs here. These are relative equal highs. There'll be nice buy stops above there. Yes, we've got these lows. But we want to see these lows get traded to, as these are our weekly targets. This low is my weekly target. It's only Wednesday, and there's high impact news on Thursday and Friday. There's no reason they wouldn't send price higher one more time and then run it Thursday through Friday. So just take that into account, and that's how I'm thinking. Let's go now to Euro USD just to finish up. Now, Euro's been significantly weaker as well. This is how I know there's a lot of manipulation going on, and I don't really want to be involved. Don't get me wrong, beautiful trading day, beautiful setups on Euro. If you're in the Discord, you'll know about that. But yeah, let's go to the daily. Now, obviously, we're expecting a down close week. We can now look at this as a inversion fair value gap right here, from this low to this high. Drag that forward. And I was already speaking about this level. If you watch yesterday's video, you'll know about this level. Let's go to the 4 hour. And you'll remember me saying, if price trades through this, it needs to do it with aggression. Did it do it with aggression, guys? Look at this candle. Did it do it with aggression? Yes. Now you're probably thinking, how did I know, or how did I anticipate that? It's just a matter of the fact that if I want to see lower prices, I want it to be 1, low resistance, 2, I want it to completely disrespect the hell out of any kind of potential bullish PD array. And remember, at this point, before this candle traded lower, this was a bullish PD array because it was an inversion fair value gap, right? I want to see it disrespect it. That's what we're getting. So that's nice to see, and it's supportive of our bearish bias on euro, but it's just weird and not nice when we add GBP into the mix, and you can see that they're clearly holding GBP, you know, hostage. And I'll show you what I mean. So if we look at this low, and then we look at the same low on GBP, which is right here, look at that. What we might get towards the end of the week is what we call the six sister approach, when GBP may have to snap into action and start catching up. I'll talk more on that tomorrow if I do think it's going to play out. But when I see this much, you know, difference, I do get very wary, and you do need to be much more cautious. Nonetheless, what am I expecting? Well, like I said, if we're expecting a level of if we're expecting a level of discount on dollar, then that means on euro we need to think of some kind of premium. Where could it trade to? It can still trade back into this inversion fair value gap, so that's still significant to me. Let's go to the 1 hour and we'll take a close look, and you'll see this is underneath a nice bearish order block, and it's underneath a mitigation block. High, low, lower high, displacement. This low is a mitigation, so price can happily come back into this before trading on lower. I'm keeping an eye on this level the exact same way I'll be keeping an eye on this bullish order block on dollar. So yeah, to be honest, I'm not gonna, like I said, with 10 a.m. news, oh yeah, there's news at 2 as well. That's gonna be interesting. Yeah, that's pretty much everything anyway, guys. Let's go to the 15-minute just to have a look, and you'll see we traded down, and look at this consolidation, guys. We hit this like a car hitting a wall, like poof, you know. They're not ready to send it through here. You know how price fell through this inversion fair value gap with ease? They couldn't do it through this because look at this kind of consolidation. That's wild, you know. So what do they need? Because think about it. We never had high impact news, and price easily traded through our inversion fair value gap. It failed to get through this. When do we have high impact news? Well, we got it at 2 a.m. We got it at 10 a.m. on dollar, and then we got it for Thursday and Friday. So that's why this may, when we do eventually start attacking this, it's likely going to be on the back of news. But we can talk more on that later in the week. Right now, I want to see, can we create some more premium on euro, a little bit more discount on dollar, and then, you know, with that 10 a.m. news, I'd like to think we can start to see some more pushing higher. That's going to be everything, guys. Hope that all makes sense. Craziness. Hope you find this insightful. Join the mailing list, join the Discord, smash subscribe, and I'll catch you tomorrow. Peace.